Welcome to Earnings Recap. Today we're covering Amazon.com's earnings report and earnings call January-March 2025. If you enjoy this kind of content, please like the video and subscribe to the channel. So today we're really going to dig into Amazon's first quarter of 2025. We've got the earnings report right here and notes from the conference call too. Our plan is basically to pull out the most important stuff, the key numbers, what management's thinking, give you the clear picture without you having to sift through it all.
Sounds good. And right off the bat, the top line looks pretty strong. Net sales hit $155.7 billion for the quarter.
Okay, $155.7 billion. How does that compare?
That's up 9% from the same time last year when they did $143.3 billion. What's interesting, there was actually a $1.4 billion negative hit from foreign exchange rates.
Ah, right. Currency fluctuation.
Exactly. So if you take that out of the equation, the actual sales growth was more like 10%.
10% underlying growth. Okay, that paints an even better picture.
It does. It shows the core businesses are really performing.
So let's break that down a bit. Where did the revenue come from segment-wise?
Yeah.
North America.
North America brought in $92.9 billion. That's a solid 8% increase compared to last year.
Okay, 8% there.
And international?
International was $33.5 billion. That's up 5% as reported. But again, if you adjust for that foreign exchange stuff, it's actually up 8%. Same as North America, basically.
Got it. Consistent growth when you adjust. And the big one, AWS.
Yeah, AWS continues to power ahead. $29.3 billion in net sales for them.
And the growth rate there.
A really strong 17% jump year over year. That cloud demand, it just keeps going.
17% is definitely significant. Okay, so revenue is looking good. Let's switch over to profit. Operating income.
Big increase there, too. It reached $18.4 billion.
Oh, wow. Compared to
$15.3 billion in Q1 last year. So that's, a 20% increase year over year?
20%. Nice. And how did the segments contribute to that number?
Okay, so North America's operating income was $5.8 billion, up from $5.0 billion.
International also improved. $1.9 billion compared to $0.9 billion last year. So positive movement, even if smaller.
Right.
And AWS, again, really shining, $11.5 billion in operating income. That's a big leap from $9.4 billion a year ago.
So it seems like all parts of the business are contributing more to the operating profit line.
Yeah, definitely firing on, multiple cylinders there.
Okay, strong revenue, strong operating income growth. What about the absolute bottom line net income? That saw a really dramatic jump, didn't it?
It really did. Net income for Q1 2025 was $17.1 billion.
$17.1 billion.
Which works out to $1.59 per diluted share.
And how does that stack up against last year?
Well, last year it was $10.4 billion, or 2.98 per share. So you're looking at a 64% surge in net income and 62% in earnings per share. Huge gains.
Wow, those are numbers that definitely grab your attention. Was there anything specific driving that massive increase? Something unusual?
Well, yeah, the report called out a specific item, a pre-tax gain of $3.3 billion from their investment in Anthropic.
Ah, the AI company.
Exactly. That's considered non-operating income technically, but it certainly gave a big boost to that final net income figure. Shows how these strategic bets can pay off.
Makes sense. Okay, let's shift gears to cash flow. Always important to look at. How did that look?
Right. So operating cash flow, looking at the trailing 12 months, was $113.9 billion.
And that's up.
Yeah, up 15% year over year. So generating more cash from operations.
But what about free cash flow? I thought I saw something different there.
You did. Free cash flow, also on a trailing 12-month basis, actually decreased. It came in at $25.9 billion.
Down from
$50.1 billion for the 12 months ending back in March 2024. So quite a drop.
That's a significant decrease. Did they give any reasoning for that?
They framed it in terms of their long-term goal, which is, optimizing free cash flows eventually. But right now, they're making pretty heavy investments. Remember that $4 billion they announced for the rural delivery network in the U.S.?
Oh, right. Yeah.
That kind of capital expenditure ramps up, and it directly impacts free cash flow in the short term. The idea is it drives long-term value and hopefully much stronger free cash flow later on.
Got it. Investing now for future returns. Makes sense. The earnings release usually has other bits and pieces, operational stuff. Anything else jump out?
Yeah, a few things. They made a point about achieving record delivery speeds for Prime members.
Faster deliveries, always good.
And they said it's because they've gotten smarter about where they place inventory, closer to customers. Also, third-party sellers, their share of units sold stayed steady at 61%. That marketplace is still a huge part of the business.
61%. Wow. Consistent.
And they mentioned customers saved over $500 million during their big deal events. Shows the scale of those things.
And speaking of deals, they announced the next Prime Day is coming up in July, number 11, I think.
Yep, the 11th one. Clearly a fixture in their calendar now. Drives a lot of volume and engagement.
And it's not just deals, they're still expanding physically, right? You mentioned the rural network, but wasn't there something about Ireland?
That's right, they launched Amazon.ie, so planting a flag more formally in Ireland, expanding that global reach.
And broadening selection, too. I saw names like Michael Kors, The Ordinary, even luxury stuff with Saks.
Yeah, bringing Saks onto Amazon is interesting, trying to capture that high-end fashion market. It's all about expanding the selection, becoming the place people go for, well, everything.
Including space internet, apparently. Project Kuiper made progress.
He did. They actually launched their first satellites. It's still early days, obviously, but it's moving from concept to reality.
And their own AI models, Amazon Nova.
Also moving forward. New capabilities mentioned Sonic, Act SDK, Premiere. They're developing their own AI alongside offering others.
And on the AWS side, they keep signing up big customers.
For sure. The release mentioned new deals or expansions with companies like Adobe, Uber, NASDAQ. It just reinforces the trust big enterprises have in AWS.
Okay, that's a good summary of the report itself. Let's dive into the earnings call. That usually adds more color, right? Management commentary, analyst questions.
Exactly. And as you might guess, AI was a huge topic on the call.
Yeah.
Especially how it relates to AWS.
No surprise there, given how much everyone's talking about AI. So what were the key takeaways from management on that front?
Well, they put some numbers on it. They said that AWS AI business is already at a multi-billion-dollar annual revenue run rate.
Multi-billion-dollar run rate already. Wow.
And get this, it's growing at triple-digit rates year over year. Just explosive growth. Shows how fast companies are jumping on AI in the cloud.
Triple digits. Incredible. What about the hardware needed for all that AI? The GPUs and stuff?
Yeah, they talked about strong demand for the capacity, specifically mentioning their P5 GPU instances and the Trainium 2 chips. Those are their custom AI training chips.
Right, the specialized stuff.
Exactly. Demand is high, and they said they expect the supply chain for those key components to improve as the year goes on. So trying to keep up with that huge demand.
So they're building out the infrastructure. What about the actual AI services AWS offers on top of that?
They highlighted Amazon Bedrock. That's their service for accessing different foundation models, the big pre-trained AIs. And they're adding more models all the time. They mentioned Anthropic's latest Claude 3.7 Sonnet, Meta's Llama 4, models from DeepSeek and Mistral AI, plus their own Amazon Nova models.
So offering choice seems key to their strategy.
Definitely. Giving customers a menu of different leading AI models to work with.
Running all this AI can get expensive, though. Did they talk about costs?
They did. Specifically mentioned focusing on reducing the cost of AI inference.
Inference being actually using the model, not training it.
Right. That's often the ongoing bigger cost once a model is deployed. So making inference cheaper helps make AI more practical and scalable for customers.
Okay. Now, shifting slightly, but still on AI, Alexa plus Burn, that's their next-gen assistant, right?
So,
what was the buzz on the call about that?
They said the early feedback is positive. They emphasized the new sort of action-oriented capabilities. And the key thing they mentioned is a more natural interaction, not having to say Alexa before every single command. More conversational.
That would be a nice improvement. Less robotic.
Could be, yeah. And they pointed out, they have this massive installed base of existing Alexa devices out there. Huge potential audience if they get this right.
True. Okay, another topic that often comes up. Tariffs. Especially with a global company like Amazon. What was their take?
Management basically said there's still uncertainty about where tariffs might go. But crucially, they didn't see any significant hit to demand or prices in Q1 because of them.
So no major impact felt yet?
Not yet. They did float the idea that maybe some customers were stocking up a bit, sort of anticipating potential future tariffs. A bit of hedging, perhaps.
Interesting. And how are they positioning themselves if tariffs do become a bigger issue?
2 main points. One, their huge seller base, over 2 million third-party sellers. The thinking is not all of them will pass on tariff costs, providing some price resilience.
Diversity in the marketplace helps.
Exactly. And second, they reminded analysts they've been working for the last 6 years to diversify where products are made, moving some production out of China. That helps mitigate risk too.
Okay, diversification. Makes sense. Thinking about AWS growth again, beyond just AI, what else did they say is driving that 17% jump?
They keep hammering this point. Over 85% of global IT spending is still on premises, not in the cloud.
So a huge market still to capture.
A massive runway, yeah. They believe more companies are realizing they need to move to the cloud, not just for cost, but for speed, for developer productivity. And yes, often alongside their AI plans, so it's not just generative AI growth, their traditional cloud services are growing strongly too.
And that future demand, is it showing up in their contracts, their backlog?
Absolutely. The AWS backlog contracted future revenue jumped 20% year over year. It's now at $189 billion.
Wow, $189 billion.
And the average lifespan of those contracts is about 4.1 years. So that gives them pretty good visibility into future revenue streams.
Okay. Now, AWS margins have generally been very healthy. What's driving that, and are they expecting it to continue?
Well, the strong revenue growth helps, obviously. But they also point to continuous work on efficiency. Things like software improvements, better networking gear, making data centers more power efficient, and using their own custom chips, like the Graviton processors.
Those custom chips seem key.
They really do help control costs and boost performance. However, management did signal that AWS operating margins might fluctuate.
No, why is that?
Because they're still investing heavily in innovation, R&D, new tech, plus there's always competitive pricing pressure. And as these new generative AI services ramp up, especially with more capacity coming online later this year, that could impact margins in the near term too. So maybe not a straight line up forever.
Right. Investment phases can compress margins temporarily. Okay, that makes sense. Let's wrap up with the outlook. What guidance did they give for Q2 2025?
Okay, for the second quarter, they're guiding for net sales between $159 billion and $164 billion.
Which translates to what kind of growth?
That's about 7% to 11% year-over-year growth. They expect a small, like 10 basis point negative impact from foreign exchange in Q2 as well.
Okay, 7 to 11% growth. And operating income guidance.
They projected that between $13 billion and $17.5 billion. For comparison, Q2 last year was $14.7 billion. So the range spans slightly below to significantly above last year's number.
That seems like quite a wide range, $13 to $17.5 billion. Any reason for that?
They mentioned a couple of things. First, Q2 typically has a seasonal step up in stock-based compensation costs, so that's baked in. But they also explicitly mentioned the uncertainty in the external environment as a reason for the wider guidance band. Hedging their bets a bit, maybe?
Macroeconomic concerns still lingering.
Seems so. And one other specific call-out. They expect more costs in Q2 related to Project Kuiper launches. Building that satellite network isn't cheap.
Got it. So if we try to sort of summarize this whole deep dive, Amazon's Q1 looked pretty strong, wouldn't you say? Good growth across the board, AWS and advertising doing particularly well.
Definitely. Solid financials and clearly massive investment and real progress happening in AI. That was a huge theme.
Right. They seem to be navigating the tariff uncertainty okay for now, and the outlook is generally positive for more growth.
But with caveats. They acknowledge the economic complexities, and those investments, especially in AI and things like Kuiper, might mean margins bounce around a bit.
So here's something to maybe leave you thinking about. Amazon's pouring billions into AI, into cloud infrastructure, into satellites. Meanwhile, most IT spending is still on-prem.
Yeah, that 85% number is staggering.
So when you combine those huge investments with that enormous untapped market, what kind of transformations could we see down the road? Not just in tech, but across all sorts of industries, in our daily lives even, things we maybe can't even quite picture yet.
It's a fascinating question. The scale of what they're building, combined with the potential of AI, yeah, the long-term impact could be truly profound. Something definitely worth considering.